Bank of America just announced a really unique zero down payment mortgage product. This program aims to help underserved first-time homebuyers achieve homeownership. The timing of this program is honestly a little bit odd given where we're at with the economy right now and the housing market slowly slipping into correction territory. And it's giving me a little bit of 2008 housing market crash vibes. But I've talked to a lot of people who are really interested in this program and they've had a ton of questions. It's a little bit hard to find information on this online right now, even on Bank of America's website. So I scoured all the information I could get to pull together all the details to give to you all today. And if you like finance, real estate, and business content, make sure you subscribe to my channel because I bring you content just like this weekly. All right, so let's first answer the biggest question of what even is this program? So this is Bank of America's new mortgage program where they offer mortgages to people for $0 down. So it's a really unique mortgage product, a little bit similar to how maybe a VA mortgage works, in that you can have $0 down. And it's really one of the only products on the market like it. And the program is officially titled the Community Affordable Loan Program. And this program right now is just really in a pilot phase from Bank of America and is only available in certain neighborhoods in certain cities. So the cities are Charlotte, Detroit, Dallas, LA, and Miami. And some of the biggest features, as I mentioned already, the $0 down payment. So for those of you who are first-time home buyers, it is very normal to put 20% down on a home when you're first purchasing a home, even if it's your first home or your 10th home, whatever it may be. And if you go below that 20% limit, then you're going to have to pay what's called PMI, or private mortgage insurance. And that's just to give a little bit of extra buffer to the bank in case you can't pay your mortgage and it has to be repossessed. They have that 20% buffer to where they could sell the house quicker but a little bit cheaper, and they still will make out ahead or even at worst. And the next great feature, which is really important, is $0 in closing costs. So closing costs can sometimes be upwards of 2, 3, 4% of the value of the home that you're purchasing. So if you're purchasing a $500,000 home, you could easily see closing costs of $5, $10, maybe even $15,000. So in this case, those closing costs would be absolutely free to you. And then finally, as I already mentioned, $0 for your PMI. So even though you're going to be going below that 20% standard threshold for down payment, you won't have to pay a PMI, which again, depending on the size of the home that you're purchasing, can definitely be a couple $100s a month. So a big, massive savings. And the one really key and crucial aspect of this is that initially this program is being rolled out to those 5 cities like I mentioned, but they're specifically targeting traditionally Black or Hispanic neighborhoods. But the program is not restricted by race, just by neighborhood and location. And then finally, another big one here is that there is no minimum credit score required. So traditionally, if you're going now to get a regular home loan, if you have under a 600 or under a 580, it's gonna be extremely difficult for you to get a solid loan of any kind, even if your payment history recently has been fantastic. So this program is great because they aren't going to be checking your credit score at all. So instead of basing your ability to pay on your credit score, they're going to be looking at other factors like, are you paying your credit card? Are you paying your other bills on time? Your phone bill, your car loan, your car insurance, all these sorts of things they're going to be looking at instead of a credit history that, you know, maybe you had an issue 5 years ago and it's still affecting you today. That's not going to be a factor. So again, as I mentioned earlier, this is a super unique product that really doesn't exist anywhere else. Some of the other programs like the FHA or VA loans are really great programs, but are not quite as beneficial as this is. Now let's touch on the requirements. So what do you actually need to bring to the table here to qualify for one of these loans? So the first major requirement is that you must be a first-time home buyer. So if you currently own your own home or own a home that you've lived in recently, then you most likely are not going to qualify for this. And then, as I already mentioned, to qualify for this, you have to be purchasing a home in one of the pre-designated areas in one of the 5 cities. And then the third requirement, you must pass Bank of America's credit guidelines. And I'll read what that is to you here on their website. So Bank of America says it uses credit guidelines based on factors such as timely rent, utility bill, phone, and auto insurance payments. It requires no mortgage insurance or minimum credit score. Individual eligibility is based on income and home location. And I'll be sure to link this article down below so you all can check it out as well. And the next requirement to qualify for this mortgage program is you must complete Bank of America's homebuyer certification course. And what this course does is it just seeks to educate homebuyers, and specifically first-time homebuyers, so that they're prepared to step into homeownership and they understand what comes along with that, all the financial implications, dealing with payments and loans and repairs and all that good stuff. So definitely a useful program to complete if you haven't owned a home before. And then another really interesting factor here is that Bank of America has not claimed or stated any sort of income thresholds or income limits. So whether that's you make too much money or too little money, they haven't come out and said anything. Now, that being said, you still are going to have to convince Bank of America that you earn enough money that you can afford to buy whatever home that you're interested in buying. So this is just like buying a home with any other bank at any other location. You always have to convince them through your earnings and your tax returns that you can afford to make the payments and you're not going to go into default or bankruptcy and leave the bank with this property that they have to figure out something to do with. And usually how banks determine this is they use a metric called debt to income ratio. You might see that as DTI. And what this is a pretty simple way to calculate is you just take all of your monthly recurring debts. So things like car payments, student loans, insurance, things like that. Take the minimum payment for those and divide that by your gross monthly income. So let's say I have $1,000 total of minimum debt and I make $5,000 a month. That would mean my debt to income ratio is 20%. Now, a really important thing to understand is what's a normal or acceptable debt to income ratio. So generally banks, once you start getting over a 44% debt to income ratio, you're gonna have a really hard time qualifying for a loan. Banks wanna see you much lower in the 30s, anywhere around 35 or below is where banks start to get a lot more comfortable. So just keep this in mind as you're shopping around for homes, that it's really important to maintain a strong debt to income ratio so that the banks will be confident that you'll be able to make the payments for your home and all your other debt obligations every month without an issue. All right, so now that I've walked you through what the program is and what the requirements are for qualifying for this zero down mortgage, I wanna walk you guys through some pros and cons, as well as my personal take on the program and who this might be right for and who it's probably not right for. So first and foremost, the number one pro is just getting into real estate in general. Many of you probably know that real estate is the number one generator and creator of millionaires in the country by far. And that's because so many people bought a home in the 1970s or the 80s for $20,000, $30,000, $50,000. And now 30, 40 years later, that same home is worth $1, $2, $3, $4 million. And so that's what's creating so much wealth and even generational wealth in some cases for many individuals. So this program is a fantastic way to help people that haven't necessarily been able to benefit from that start to accrue and generate wealth. Some of the statistics that Bank of America is quoting why they're doing this is, again, to close that gap, the racial disparity gap between homeownership. So let me just read you some of these statistics from Bank of America. According to the National Association of Realtors, today there's a nearly 30 percentage point gap in home ownership between white and black Americans. For Hispanic buyers, the gap is nearly 20%. And the competitive housing market has made it even more difficult for potential home buyers, especially people of color, to buy homes. So again, getting more people into homes, a great thing, and this program definitely seeks to do that, so big pro. I think another huge pro here for buyers is that if you're an individual who maybe had a stroke of bad luck for a few years and your credit score for whatever reason tanked, maybe you went through a bankruptcy or whatever your situation was, and you just haven't been able to build that back up yet, but you have the finances to support a home purchase, then this is a really great way for you to get into a home. Now let's also talk about some of the cons here. So I think the number one con here is that this could be an incredibly dangerous program for somebody who struggles with finances. Remember, home ownership is not simple and it's not cheap or free by any means. lots of things pop up with homeownership, whether it's repairs or insurance, taxes, all sorts of things like that. And if you're not prepared to take on that extra burden, those extra responsibilities of homeownership, it could be quite challenging. And so really the people that I worry about most are just those who struggle financially and haven't been able to build and maintain any sort of savings. And I worry that this program might let some people get into a home that they're just not financially prepared to buy and to take on that responsibility. I think one of the best rules of thumb is that you want to have at least 3 months of living expenses saved up, if not up to 6 months of living expenses saved up for any sort of rainy day or if you lose your job. And so my suggestion, if you're not in a position like that, where you do have some sort of savings built up, then homeownership might not be the best option for you yet. Now remember, being house poor is definitely a thing, and it is a very stressful situation to be in. Remember, you move into a house, you gotta furnish it, you have to pay electricity, you have to pay bills, the water, the trash, you have to pay taxes, you have to pay repairs, all sorts of things that start to really accumulate and can definitely cause a lot of financial stress if you're not prepared to take that on. And I think another really big con here is that, remember, Bank of America has to make money somehow here. They are, I think, doing this out of the goodness of their heart to some extent, right? But remember, Bank of America is a publicly traded company, which means they're beholden to their shareholders. They can't just go out there and give away money or give away a lot of money and take a loss on this, right? So they're definitely expecting to make some money here, and that's probably going to come in the form of them increasing the interest rates a little bit more than what you would get with if you had a great credit score and you were doing a traditional 30-year fixed mortgage and you had a 20% down payment. So expect to probably pay, a percentage, maybe a little bit more than the best rates for some of these other programs, because they just have to adjust for the added risk. But I also want to be very clear that Bank of America is not in it to have people fail in this program, right? It just doesn't make any business sense for them to do so. They're validating your income and they're validating your ability to pay for the mortgage because they want you to succeed, because it costs them a lot of money if you don't. So they're definitely going to make sure that it's a win-win situation for both parties. Okay, so my overall take here is that I think this is a fantastic program overall. I think it's gonna help a lot of people who would not have been able to get into a home and start to accumulate and build wealth and have a great place for themselves and their family to grow up, that they can call their own and have some home ownership. I do think that there are gonna be some people on the margins who are just not prepared for this and are able to get into a home, and then it will cause them more stress and more heartache. But again, I think the vast majority of people will definitely positively benefit from this. One other really important caveat here is that, remember, as I mentioned at the very, very beginning of this video, that the housing market has slowly slipped into correction territory. In many, many markets, we're seeing prices decline and fall from their peaks earlier this year. And so if you're planning to get into a home and thinking you might have to leave within a year or two and have to sell, this might put you in a really dangerous position, because prices definitely could fall 5, 10, 15% in whatever area you live in. And some areas could fall even further than that. So just be really careful with that, because you don't want to find yourself in a situation where you buy a home, the value of the home drops 10%, and then you have to sell, and then you end up selling the home and you still owe the bank money even after you give them all the money you got for selling it, right? So that would be underwater in your home. This is what happened to a lot of people in 2008, where they owed more on the home than it was worth. So definitely not a situation you want to be in. But I think if you're planning to do this long term and you think 5 to 10 years you'll be in the home for sure, then even if the market does come back down, by then it'd be very unlikely that it wouldn't be back up and even beyond. So still a great idea if you're planning to be in the home long term. All right, guys, I really hope you enjoyed the video, and I hope it was helpful for all you potential first-time home buyers out there that are looking at this Bank of America zero down program. Again, I think it could be a great option, and hopefully if you are going down this route, it really works out well for you. So if you guys could do me a huge favor, make sure to smash the like button on this video, comment down below if you have any questions, and make sure to subscribe to my channel for more.